So October's just about over. We're moving into November and December. Where in the world is the market going from here? It's all about identifying the trend, and we'll take a look at it today on the Market Brief. The trend is your friend till the bend at the end. I've heard that so many times I can barely even count. But we really need to pay attention to what's going on with our trend direction on the daily and weekly charts to identify where we think the market can move. And so I think we need to first start with how to identify trend. There's really three ways that people use to identify trend. Number one would be just identifying higher swing lows and higher swing highs and connecting those higher swing lows and higher swing highs, or lower swing highs and lower swing lows. Number two would be to just draw a diagonal line that goes, connecting those points. And then number three is usually going to be things like moving averages. Today, we're going to take a look at the simplest, easiest way to spot a trend, which is to look at those turning points and to see what's the market look like today and where are potential turning points going forward. So starting now, let's take a look at the charts and slide in first to the S&P. So here looking at the SPX. And I'm looking at a daily chart. And when looking at the daily chart, the thing that I love to use in order to identify swing highs and swing lows is a zigzag comparison chart. And the zigzag chart does a really great job because what it does is it smooths out a lot of these swing highs and swing lows. Now, this is currently set to 0.5%. And that 0.5% is very effective if I'm trading something like the futures market on a 4-hour chart or on a 1-hour chart even. But when I'm trading the SPX, 0.5% is probably a little bit too sensitive when I'm looking at daily charts. So resetting this to 1%, and we're looking essentially for 1% turns up and down, will smooth out that chart just a little bit in the S&P. Now, overall, we can see that those swing highs and swing lows very, very clearly are lower swing highs and lower swing lows. So that's one way to clearly define trend. The other would be simply to use a moving average. And in our previous video, a couple of weeks ago, we talked about the 8 and 20 period moving average when we're looking at weekly charts. So weekly charts being longer term. Oftentimes, you're going to see this 20-period weekly moving average being a very important moving average. And when we talked about it a few weeks ago, we talked about the fact that we had crossed and closed below that 20-week moving average, which was a pretty strong tell. And then lastly, let's look at the daily chart and get rid of all the drawings and studies. And simply pay attention to these lower swing highs and lower swing lows. And, to truly draw a trend line, what you really want to do is include all of the points, right? The wicks that exist, 2 touches to create the trend, and then a third to confirm on a trend line. I mean, and I don't think it takes a rocket scientist to say that this is a bit of a downward trend. Now, but what's interesting about where we are today is that it's a bit of a downward trend, but we're sitting right at a prior area of resistance, and old resistance oftentimes acts as new support, 4,200 being a pretty strong level for a decent little pullback. And if we look at yesterday's price action, we see that we were given a bit of a doji. And on that doji, I now need to pay attention very, very closely to this swing high right here. This is my current controlling candlestick. The reason that I call this my current controlling candlestick is because until we can take out this high, the market will remain in a downward trend. That high is a very important point because as long as that high remains in effect, we are going to be keeping it in lower swing highs. And so we have a bit of a reversal candlestick. How high do I anticipate this reversal to go? Well, if we do start to head up today, I would look at this little area here, which we call that wick over wick area, as a really good target for price to move up to. So call it 4,300. And let's just say theoretically that we start to get a bit of a bounce in that area, meaning we come back up to here, before then dropping further? Well, looking at the trend line that we just drew, that would make for a nice continuation of the trend line that we just identified. And so we are sitting on an area where I think we're pretty likely to see a short-term bounce, at least for a couple of days, and a bit of a rally back up into some of this region. Now, there's a lot of news coming out this week as far as earnings in the tech sector, and over the next 2 weeks, earnings in the tech sector, FOMC announcements, what are we going to do with interest rates, what's happening with the Israel and Palestinian conflicts. There's a tremendous of different geopolitical and economic and individual company news that can drive those markets, but remembering that the trend is your friend till the bend at the end. And I am going to remain a seller until the market proves me otherwise. How does it prove me otherwise? Well, the way it proves me otherwise is by a higher swing high and a higher swing low. So there's one thing I want you to take out of today's session and today's short video. It's that we are looking for a controlling candlestick. Right now, this is my market's controlling candlestick. Until we can get above that, we are no longer going. We're going to be unable to break this downward trend. I think that we will get a bounce for a couple of days, but this being our controlling candlestick. Now, I would have to see us break above here and then create a higher swing low. That would be the indication of putting in a bit of a market bottom. The fact that we overcame this strong day up from October the 6th and we've put in new lows lower than our September lows is somewhat indicating as well that we could see price go a bit lower. Now, looking at this on a weekly chart, it's also clear that we've got lower swing lows and lower swing highs, and we are sitting at a level that would serve as a pretty decent line of support right in here. Does it mean that we're going to reverse? Not at all. But when we do reverse, it will happen first on the smaller time periods, right? It'll happen first on the smaller time periods. So the 4-hour charts, the daily charts before it reverses on the weeklies to give us authority to go back in and be buyers. Now, that's using the SPX. What if we use the NASDAQ, right? Well, on the NASDAQ, we also continue to be in a bit of a downward trend, but notice that the NASDAQ on our weekly chart has not really gotten lower than the prior week's low, right? It's still sitting just above that prior week's low. And when I look at this on the daily chart, we will see that the NASDAQ is sitting on a daily line of support. Did not take out the the September 27th lows. That being said, it's got a much larger room to fall if we do break down below this area. So we would look at relative weakness of the S&P versus the NASDAQ. The NASDAQ is relatively stronger than the S&P, just in the fact that the S&P has broken below. Wrong direction. The S&P has broken below its prior low. S&P has broken below its prior low, and the NASDAQ has not. So the fact that the NASDAQ has not is a relative strength to the NASDAQ. And so if we do start to see a rally up, that rally up would come a bit later. Now, where's the NASDAQ's controlling candlestick? The NASDAQ controlling candlestick would be this one right here, right? The highest high of the most recent pivot. So hopefully this will help you to identify some trends and give you some trading ideas as we head into November and December as we are rounding out October. But if you have any questions, as always, send us an email, support@tradersarmy.com. Until next time, everybody, I will talk to you soon. See ya.